Today's podcast is brought to you by Ryan, a leading global tax service and software provider that helps companies manage and minimize property taxes from acquisition to disposition and all points in between. As the firm with the most local market property tax professionals across the country, Ryan has experience in nearly every jurisdiction, unmatched by any other national, regional, or local provider.
Welcome to WMRE's Common Area Podcast. This podcast is brought to you by the award-winning editorial staff at WMRE. Let's jump right into this week's podcast.
Hello and welcome to the Common Area with your host, David Bodamer. David, how are you today?
I'm doing well. I am partially vaccinated, so that's exciting.
Sorry, I just immediately thought of like the vaccinations kids go through or puppies go through them. I've got some of my shot records here, but you're talking about the COVID shot, so that's good.
Yes. So that's exciting. It's exciting to see more signs of life. There are the parts of the Brooklyn that I'm in where a lot of shops that shut down, suddenly new things are coming in again. So I don't know, it's sort of things. I know we're not fully out of the woods yet, but it's feeling better.
Yeah. There's definitely signs of, it's almost like the signs of spring, right? Because it's getting a little bit warmer. Things are happening, things are moving, and so I think that's happening on the same front with this whole COVID issue and the vaccination. So it's kind of all coming together at the same time, which is nice. But for today, let's focus on one thing. You brought Carlos Rodriguez on the show today. Why did you bring Carlos on?
So Carlos is the CEO of Driftwood Capital, and I brought him on to give us a perspective on what's going on with, they have a kind of an interesting investment strategy. They're doing some interesting things with some new funds, and just to get a sense of what's happening with the hotel space in general. So Carlos, welcome to the program.
Hi, thank you. Thank you for having me.
So I sort of did a very clumsy little intro there, but if you could just, for folks that have not heard of your firm, could you just give us a little rundown of your background and what the company does?
Sure. Driftwood Capital, basically, the best way to understand it is like umbrella of companies and funds. And we're basically do everything with respect to hotels. We're vertically integrated. We have a sister company, Driftwood Hospitality Management, that is a management company. We manage hotels for not just our hotels, but also hotels that we manage for third parties. Mm-hmm. Then we have several funds, Driftwood Lending, which is basically a lending fund, and we lend money, mezzanine lending and preferred equity to different hoteliers around the country. Then we have Driftwood Development Partners, and that one is a fund that basically develops hotels all across the country. We either develop it ourselves or in joint ventures with other groups. So we team up with people around the country. In that one, actually, we have a huge project we're doing in Weston, in Cocoa Beach. It's a $335 million project that we're developing there. We're also doing a hotel in San Diego, a hotel in Melbourne, and a hotel in Wilmington, Delaware there at the present time. And then we have Driftwood Acquisitions. And in that one, we purchase hotels across the country, existing and hotels that are operating. In that fund, in the last few months, we've bought 3 hotels, and we're in the process of trying to buy more. So we lend, we build, we acquire, and we manage hotels as a Driftwood umbrella, let's put it that way. We're nationwide. We have as a group, we have a little bit over 5,000 employees. We have over 15,000 rooms, and it's been interesting times, that's for sure.
Sure, it sure has. And so, so it's fair to say that you're all over the capital stack when it comes to the hotels, and you're investing in stabilize, you're investing in development projects, and also do you do some distress? So basically, if someone's looking to get some looking to invest in a hotel sector, and they're looking at a bunch of different strategies, chances are you've got something that they're going to be interested in.
Correct. Yes, actually, part of the things that we do is once we buy a hotel or we build a hotel, we syndicate to investors. So investors as small as $50,000, if they're interested in investing with us, they can come in and invest. And basically, as you said, we have different strategies. So We have from value add propositions or value creation propositions to basically hotels that have stable cash flows and they're just cutting a check and getting a quarterly dividend.
Given your position in the market, like you aptly put it, it's been interesting times. It's exactly why I wanted to kind of, talk to you. We've talked to over the course of the year, we've talked to a couple of people in the hotel space, but it's been a few months. So it's good, just to kind of get another check on what's happening in the industry, especially it seems like we're at this moment where the vaccinations are happening and I know from my perspective, it seems a lot faster than like I think what people were talking about initially. And therefore, hotels, which for a while were getting, just beat up because people weren't traveling, no business travels, just a little bit of leisure travel, et cetera, et cetera. And, everyone was worried about the distress in the space. Now suddenly the outlook looks a bit different. So I'm kind of curious, from your seat, what it's been like, even maybe just in the past couple of months, and how that may be affecting the way, some of your strategies looking at the space right now.
Yeah, my outlook has frankly changed drastically in the last few months for the better. I mean, if you had asked me this question a few months ago before the vaccines came out, I mean, the outlook was looking pretty grim. With that said, now with the vaccines and the effects that the vaccines are having on people and, reaching herd immunity, things are looking much better for the second half of this year. And things are looking like there's going to be a more rapid recovery than people expected initially. It's interesting. I mean, it's always, you can't generalize. I mean,
right.
There's different sub-markets within the country, and there's different types of hotels within the country. So what I would say to you is, for example, anything to do with leisure travel, anything to do with resorts, whether they're in a lake or in a mountain or on the beach, they're doing great. Actually, in some cases, they might even be doing already better than 2019. Obviously, that's the exception, but they're doing much better. I mean, they've improved very quickly and they're ramping up very well. So anything to do with leisure, resort, I said, whether it's mountain, lake, beach, those are doing very, very well here in the United States. Now, anything to do with group business, big convention centers, they're not doing so well. And quite frankly, they're going to be ramping up a lot slower than the resort types. And then there's the in-betweens. So, when you have extended stay hotels, those perform better, just like the resorts. But again, the big boxes, the convention centers, the business hotel, those have been hurt more. And, honestly, they will recuperate a little bit slower, or everybody's expecting them to recuperate a little bit slower. So when you're looking to buy hotels like we're buying right now, we're finding a lot larger discounts in the big boxes than what you would find in a resort or something like that. So the vaccination is definitely having a huge impact, and the outlook is a lot better. And actually, to tell you the truth, I'm looking forward to the second half of this year, where we're already seeing the pickup on the reservation space, and we're starting to see small groups starting to reserve. Actually, yesterday, it was the first time I went into a live meeting about, with hoteliers. It was, a conference.
Oh, wow.
I mean, that was a huge change from, I haven't been to one of these meetings in over a year. And now that I've been vaccinated, I feel a lot better about being able to attend these meetings. So I think a lot of people are feeling the same way. I think a lot of people having what I call the cabin fever effect. And, they're tired of hunkering down and staying at home, and they're eager to go out. So as everybody starts feeling better with the vaccinations, and as we hit herd immunity, I think things bode very well for the hotel industry in the near term.
Is there any sense when that group and convention business, like what it makes sense that it's going to be a little bit slower, but do people have a feel for when they think that might kind of start kicking in again?
Well, I can tell you what we are internally as a group in our company when we underwrite to buy these hotels. What I can tell you is what we're doing, we are expecting things to get back to normal, or we're projecting them to get back to normal in late 2023, early 2024. And
Late
that's how we're
2023.
underwriting it.
Wow.
Yeah,
Okay.
early 2024. That's what we're underwriting. Now, that's not to say that we have the right crystal ball. We may be wrong, but that's what we're projecting. But again, a few months ago, I was being a lot more pessimistic than now. And I could be wrong. It could be, improving faster. Now, some people say that with Zoom and with people working from home, that maybe some business travel won't return, and that there will be some impact. I have a different opinion. And I personally believe that given time, people will go back to the way we were doing business. Maybe not 100%, but whatever business we lose from, Zoom meetings and things like that, I am sure will be replaced with other types of business.
Yeah. I mean, for individual meetings, if you're just doing a one-on-one, maybe it doesn't make sense to fly across the country. But if you have more than one meeting, or if you were planning to go on market and visit a bunch of people, there's still pretty good reason to do that when it's safe. And then also, I feel like on the group and convention side, we've had a year webinars and all sorts of online conference experiences, but I don't think it's not the same.
It's not the
Just
same.
like, yeah,
We're social beings. We're social beings and human beings. And think of it this way, from a business perspective. If you're a vendor trying to sell to a client a product, or trying to sell them a service, who is the client going to pick? The person that goes the extra mile and meet him in person and take him out to dinner and create that social connection, or the guy calling you over the phone and chatting to you over the phone? At the end of the day, competition to get the accounts, to get the business, is going to drive people to get back on the road. I mean,
right.
At the end of the day, it's all about the personal touch and the personal service, personalized service, and the contact and the warmth of becoming, building on the relationship. Zoom does a lot, but it cannot replace the human touch, the in-person meetings. So yes, there might be some effect to that lingers, but I am sure they will be replaced by other types of businesses. I remember when the internet first came out, everybody was saying, "Oh, this is the doom of business travel," and it was quite the contrary. If anything, it helped increase the amount of connectivity, and it helped increase the amount of need for business travel. So Zoom is a great service, and I am sure it will take care of some of the needs that we used to take care of by traveling. But I really don't believe that it's going to hurt us in the long run in the hospitality industry. I do believe that whatever slows down as a result will be picked up in other business areas.
I just, from my perspective, I've covered this commercial real estate for about 20 years. And I just feel like over and over again, it's really hard to predict the big changes. And I think that like all of this, a lot of the stuff that's in the past year about like things, this so-and-so has changed forever, always felt too premature. And even now you're seeing it on the office side, where even again, a couple months ago, all these companies are like, we're going to work from home forever. Or like, we're not bringing people back for at least a year or till the summer. And suddenly like Google, Amazon, a number of others, like even in the past couple of days, are like, nope, we're bringing people back like as soon as we can. That's not to say that there won't be some modifications to the office environment, because frankly, I think like the whole everyone doing open offices also didn't really work that great for everybody. But the whole office is dead, the whole cities are dead kind of thing. I think it's very hard to generalize when you're in the middle of a moment, and especially when you don't really know what the end game is going to be. So, and also like things were are a way for a reason. We like things certain ways. Like you said, we're social people. So I think trying to, and I guess it's like also how people, that's how people succeed in this business, is like being able to like really tell what are going to be actual changes and what's overreaction, and then how do you develop your business thesis, to be correct.
Yeah, don't get me wrong. I mean, we've learned from this and we've adapted. For example, the Weston project that I mentioned, the $335 million project in Cocoa Beach, which we're very excited for, and that we hope to build. We're going to be breaking ground at the end of this year on. we've modified some of the design as a result of the lessons learned in the pandemic. But we're still building a conference center there. We're still building a conference center because we still believe that there's going to be a big demand for conferences, especially in an area of the coast where, with the space race on Cape Canaveral, there's going to be a huge need for conferences around everything to do with the space race. I mean, you're talking about them spending in the next 10 years over $1 trillion in the space race. There's definitely going to be groups demanding high quality hotels. So we're still building the conference center there despite of the pandemic. Now, did we adapt and did we change the drawings and the design to improve them, taking into consideration lessons learned? For sure. But, there's still going to be group demand. It's just a matter of when.
So what kind of changes does that mean?
Well, like for example, more on the restaurant side, more open air seating, for example, on the air conditioning and air filtering improvements to make sure that the quality of the air being, recycled through the building is as best as possible. So, little things like we have a conference space, but we also have open air areas where we can have meetings taking place. So it's a mix of things that we did some changes to adapt to basically what we learned from the pandemic.
Yeah. And I mean, that's the stuff that makes the most sense. I think, based on what we learned, it's just like this air circulation, air quality, that's what's been the most important for, for being safe indoors going forward. So it sounds like, having outdoor options, having the kind of system that you need in place to make sure that the air is being filtered correctly. That's the kind of stuff that is the kind of stuff that they should be doing.
Correct. Yes.
At one point, there was also some talk of, again, we're talking about when maybe pre-vaccine, before the vaccine rollout, or when it was starting slow, there was, and the outlook may have been a little more uncertain for when hotels would bounce back. There was also some of this talk of, maybe some hotels will be converted into other property types. And I saw, like, I don't remember if there were specific funds that were going to do that, or if it was just more of a speculation. Is that something, like, does this changing overall climate and outlook for the sector now change the thinking around that as well? Like, well, maybe we don't need to take hotel supply off of the market because demand's going to come back, and the idea of converting doesn't make sense anymore.
I mean, there's definitely some of that has taken place and is still taking place, where they're looking to convert hotels into multifamily or into other uses. I'm definitely seeing it even at this time. Actually, there's a hotel that we own where we're getting unsolicited bids. Actually, we have 3 unsolicited bids. We're not looking to sell it, but we're getting 3 different groups, multifamily groups, that are actually offering us, a good price, a very good price on our property. And it's basically to demolish a part of it and also convert another part of it into multifamily. So there is that taking place. Actually, here in Miami, near where I live, an old Residence Inn was just bought to become, basically again converted into multifamily. So I'm definitely seeing that across the country, and especially in the older hotels, the ones that basically have a used up life cycle, where they basically maybe are exterior corridor and they're not up to the new brand standards of hotels, because now hotels are all interior corridor. So any exterior corridor hotel is a very good candidate for conversion or for demolishing and building multifamily. Yes, that is definitely something that is taking place. I have seen it. I have received offers to convert some of our at least one property of ours into multifamily. So that's still taking place. Now, having said that, obviously, as the numbers in the hotel industry recuperate and as things get better, obviously people won't feel the need to sell at deep discounts, and people will basically try to hold on and hopefully recuperate and start making some money, and therefore, they may keep it as a hotel. But I will say to you that yes, I'm definitely seeing some of what you're saying across the whole country. In the entire country, I've been seeing it. Yes.
Okay. Switching gears a little bit, I'm curious about, you talk about you've got funds, you've got investors. You mentioned earlier as little as $50,000 as a minimum investment. What is your process right now for going out and meeting and raising money and being investors? How do you get in front of people? How do you navigate that? How do you report back to them? And is that process different right now versus, what it would have been like previously?
Well, the process, well, as to in maintaining contact with the investors, that has changed a little bit because obviously pre-pandemic, we would have events and we would travel to have in-person meetings with the groups of different and potential investors. And that has been substituted temporarily into Zoom meetings and webinars that we perform. But, we're hoping to switch back again to being able to meet in person. Like we had an annual investor conference where we had the CEOs of Marriott, of Hilton, of Margaritaville, of different entities come and speak to our investors. And last year we had to do it via Zoom or via the internet in order to be able to tend to the needs of our investors. But we're hoping to go back to in person as quickly as possible. The way we work it is, we do have a whole investor relations team that's basically there to answer any questions that our investors may have. The interesting part is there's I don't know if it was Warren Buffett or who said this before, but it's like you buy when everybody's selling and you sell when everybody's buying. and right now, quite frankly, is an amazing time to be buying hotels or be investing in hotels because of the distress.
Right.
And quite frankly, if you look at the history of the hotel business of the industry over the years, the hotel industry is a very generous business. I mean, it really is. The returns that overall through time investors get are very good returns. Now, you need to put up with a little bit of the cyclicality of things, and you need to put up with some of the downturns like the one we just experienced. But as long as you structure the deal the right way, with the right amount of debt and the right amount of capital, and as long as you structure and do your underwriting and buy it right, then it's a very generous business. So we've been finding investors, and as soon as they understand our business model, it's not been tough at all to get people to commit and to join us.
And you put your money alongside your investors, right? You always got a share of capital in every deal.
Yes, actually, we have a little bit of a different model from most people. We buy the deal ourselves 100%, and then we turn around and sell pieces, and then we retain 10% of the deal, and we retain the general partnership. But we always have skin in the game. We always own 10% of the deal, but we start by owning 100%. So if we don't get investors to buy the other 90%, we will end up owning the 100%. Now, to this day, we've always placed the 90%. We've never kept more than the 10%, but this tells you the level of commitment that we have on a deal because we put our money where our mouth is. We basically say to the investor, look, if you're not willing to invest, don't worry, we own it already.
And are the investors that you're talking with, are we talking about like high net worth, family offices, individual, institutional? Who are the kind of people that are investing with you?
To this day, in the funds, we only have family offices and high net worth individuals because we raise the money under the 506C rules from the SEC. You need to be an accredited investor to be able to invest with us. So you need to be a high net worth individual or a family office, but we do as little as 50,000. Now, in other side of our business, we do deal with institutional investors, but the funds, are basically to this day been focused on family offices and high net worth individuals, or I would say accredited investors.
Well, it's a good space to be in. It seems like there's so much interest in this family office space. We're trying to get a handle on it too. It's very hard for us to understand what those investors are doing because they don't have to talk about what they're doing. They're very secretive, but I know that capital is very interested in real estate, something like 20%. Some of them love just doing all real estate, but I think in general, family offices have a pretty healthy, usually have at least a minority stake of their portfolio devoted to real estate. So it seems like a really just great
A-
space to
and
be in.
there's a reason for it. I mean, the returns, for example, in our case, if you buy, a hotel with us, you're talking about returns of north of 15% internal rate of return. In the lending fund, is you're talking about a IRR of 19%. I mean, if you buy a stock in the New York Stock Exchange, I mean, they just don't give you the returns that we give. Now, obviously, there's not as much liquidity, and that's the price you pay for it. That the liquidity is a little bit less liquid of investment, but the returns are there. That's what I said. The industry is a very generous industry.
Is there like a minimum amount of time that someone has to be in? Are they dated investments or funds, or is there just like a minimum hold period that people have?
Well, in our case, I mean, we what we tell people is we don't have a time frame to exit a deal.
Mm-hmm.
We sell when we try to maximize the returns for our investors. So we don't have a set time frame. So when we buy a hotel, basically the hotel, we may hold it in our portfolio anywhere between, call it 3 to 7 years. We'd say people expect average of 5 years. The loans that we make, if you buy into one of the loans that we make to somebody, usually those are like 3-year loans. So if you invest in one of our loans that we made to somebody, again, you're talking about a 2-3 year period. So in general, if you're doing a development with us, you're talking about 5 to 10 year hold. If you're doing an op zone, because we also do op zones, which by the way, they're phenomenal instruments to invest in, because you have zero capital gains on the new project, and you get to delay your capital gains on your previous capital gains for 7 years. So the op zones basically are 10-year holds. So it depends on the type of product that you're investing with us. If it's a loan, you're talking about 3 years. If you're talking about acquisition of a hotel, call it 3 to 7 years. If you're talking about an op zone development, you're talking about 10 years. A regular development, call it 7 years. So it depends. It depends on the type of product that the investor is interested in putting their money with or investing with us.
I've taken up a good amount of your time now, so I'm just going to let you go in a second. But is there anything that I have not asked you about, that important observations or things that you would like to underscore that I have not asked you about?
Again, the main thing, the main takeaway is all businesses, especially in the hospitality business, it's a cyclical business, and it's a business that has its ups and downs. But as long as you have the staying power, it's a really generous, good business. And as long as you get in with the right group, with the right investment thesis and the right capital structure, you can do very, very well. Obviously, you don't put your eggs all in one basket. You need to diversify. But I would definitely entice anybody to take a look at the hotel industry. And quite frankly, now's the time. Now's the time, because the pandemic has created opportunities that we haven't seen since 2008 recession. Now it's a very good time to come in and take advantage of the situation. And especially now with the vaccination and the pandemic, hopefully getting over it sometime soon, hopefully in the summer, I think that there's going to be a renewed, bigger amount of travel taking place, because God knows, I mean, I have cabin fever. I mean, I used to live on a plane, and I haven't gotten on a plane in a long time. And I'm sure there's a lot of people like me. So I think we're in for good times. I don't know. I understand after the Spanish flu, there was the roaring 20s. Well, guess what? I think we're going to be in the roaring 20s again.
Yeah, no, it's definitely going to be. I mean, I'm looking forward to traveling again. I haven't seen my father in over a year because he's in North Carolina. We haven't seen my wife's family in even longer, because we hadn't seen them for a little bit before this all started. So we're even just like, getting on the road to see family, and then in addition to travel. So I know that we are ready once as it's becoming safe.
Yep.
Carlos, I want to thank you so much for being generous with your time, speaking of generosity, and walking us through and giving, and answering all my questions. I really appreciated you taking the time.
Well, thank you for inviting me. It's been a true honor and pleasure. I really appreciate it.
Gentlemen, this was a fantastic podcast. David, I am seeing a pattern, right? I mean, I'm seeing a pattern. The guests that you're bringing on from 6 months ago, 8 months ago to today, the feeling, the news, the optimism is just getting higher and higher and higher. It seems like there's a lot more hope. every time we get together. So I love the fact that Carlos brought up a lot of positive things that are going on, positive opportunities. So David, thank you so much for bringing him on the show.
Absolutely. It's a big relief that we're, commercial real estate is taking some hits over the past year and a lot of uncertainty. So it's nice that we're seeing the upside take shape.
Yeah, absolutely. Again, David, thank you so much for bringing Carlos on the show. Of course, Carlos, thank you for being here. And our last thank you goes to you, the listening audience. Thank you for tuning in and listening to the Common Area Podcast with David Bodamer. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when David comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your colleagues. Again, thanks for listening. For everyone at WMRE, this is Eric Johnson inviting you back in 2 weeks for all the stories that matter to you. We'll talk to you soon.
Thank you for listening to the Common Area Podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of WMRE or Informa. The content has been made available for informational and educational purposes only.
Today's podcast was brought to you by Ryan, liberating our clients from the burden of being overtaxed, freeing their capital to invest, grow, and thrive.